Emotional trading is why most people blow their trading accounts or remain stuck at break-even. Does this sound like you? If it does, then in this video I will show you 5 steps I used to stop trading emotionally and gain more discipline within just 30 days. Let's dive in. Step 1. Trading platforms have been designed for gamification and to get people hooked. So they are very colorful and often have a lot of flashing or changing numbers. This stimulates dopamine in the brain. As a result, we tend to want to take action out of excitement. So remove all flashing icons and numbers so your screen appears as static as possible. It should look boring, use happy colors, and remove all red where possible. Remember, YouTube influencers will always have colorful videos and backgrounds, along with colorful props to drive engagement. You are not a YouTuber. Do not confuse what you see on movies with real trader setups. If you see numbers on a real trader's screen, it's usually a depth of market feed for those who trade futures via ladders. This is something else entirely. Step 2. Most of us have been poorly socialized around money. I am sure you remember the feeling of dropping your money and losing it and everyone's reaction to the event. As soon as you became an adult, your parents and other people started to equate responsibility to having a high-paying job and a mortgage. This means that most of us believe money is the most important thing in the world. It's why you are a trader instead of an artist. So you need to remove all P&L information from your screen. This means you can focus on making good trades according to your trade plan. Trading platform providers deliberately put the P&L in your face to trigger your emotions. So get rid of it. I guarantee you will immediately start making better trades. Step 3. Scientists have proven that dopamine gets released in the brain as soon as we anticipate a reward is possible, and cortisol is released as soon as we are disappointed or a situation fails to meet our expectation. This is why most people are emotional wrecks as traders. So instead of anticipating your trade is going to be successful, define how much you're willing to lose on any trade you put on. I did another video on position sizing. Be sure to check that out. Also, determine when you should take profits beforehand. Make it realistic. This immediately reduces the euphoric effect before you put the trade on. Basically, no dopamine hit. This also means you are less likely to be concerned about any loss. No cortisol spike. It simply becomes the cost of doing business. Step 4. So many traders talk about 1 to 3 risk reward, 1 to 8 risk reward, etc. That's how I know someone isn't a real trader. Once you tell me about asymmetric risk profiling in this way, I immediately tune off. The largest asymmetric risk profile a trader can hope for is 1 to 2 at best. I don't care what you're trading. The key metric that determines profitability is size, which is defined by how levered you are or can get, and number of correct trades. In other words, probability. This means you need to be able to trade on the extremes of the volatility and have a very large risk appetite, and that means deleveraging to increase the probability of a correct outcome. So reduce your risk-reward profile to 1-to-1 or even below, depending on asset volatility. This will certainly increase your probability and create a more stable equity growth curve with perhaps more drawdown per trade. This reduces the negative spiral that occurs with frequent losses in asymmetric risk profiling. If you want to learn how I do this, check out the link to my Discord server in the description below. You will also want to hear this next bit, so sit tight. It is natural to think asymmetric risk profiles are the best, but in truth, if you have 10 trades and you lose 7 in a row for $100 a piece, then you're down $700. Are you going to keep going? Let's say you do and your next trades turn into winners. That's $900 gross minus your initial $700. That's $200 net. So you risked $700 as an absolute figure to make $900 as an absolute figure. That's just how the math stacks up. It simply does not deliver a superior outcome in the long run. Step 5. This one is the most important one. And if you stay to the end of the video, I'll give you a bonus step. A brokerage account is not a bank account. Most people want to load it with money so it looks attractive and they can pose. Think about MF Global and the crash of 29, FTX, and all the brokers and banks that melted with your money in it. This is not only risky, but having huge deposits encourages emotional trading. Brokers offer in some cases 500 to 1 leverage ratios, so there's no need to have huge deposits. So start with $500 as an absolute risk number. Your goal is to simply make $500 over any timeline with correct sizing. I have another video where I tell you all about sizing correctly. You'll be amazed how quickly you can do this with very little emotional pressure. This is simply due to the leverage available to you. You can use a smaller amount, but I figure most people can afford to lose $500. Remember, if you can't do this, how the hell are you going to make a living as a self-funded trader? Think about it. After all, your net worth has to be at least $20,000, right? So what's $500 against your net worth? And you're not even risking the whole $500. Now for that bonus step, I personally believe in building volatility-adjusted risk parameters. So, for example, if my market typically does 3 points in a day and it is trading around its extremes, then it makes sense to have a position with, say, 2 points of risk. This means I've adjusted my risk based on historical volatility. If you are an equity trader, you can use the options market to get information on the implied volatility and see where the option premiums are priced relative to their historical pricing. This in itself is a golden nugget that most people would require you sign up to a course for. Talking about courses. I do have a complete professional option course if you want to know how I sell options to generate weekly income. I will leave details in the description below. Till my next video, adios.